Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm looking at 5 casino stocks that are worth watching here in 2020. We're coming right in the midst of the virus scare that's going on across the world. So there's some important call outs to think about if you're interested in investing in casino stocks right now. We'll get into those in just a little bit. And as always, a friendly reminder that these videos are for entertainment purposes only. Please make sure you talk to a professional financial advisor before taking on the risks of investing. But if you do enjoy stock market content, investing ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you for everybody for all your support so far. All right, before we jump in, just a couple call outs about casino stocks in general in the midst of the virus scare that we have right now. This video is being published in early April, and obviously all of the casinos are closed. And not only are casinos closed here in America, but we also have the absence of sports as a whole. So Major League Baseball season hasn't started. There's no NBA playoffs, NHL playoffs, any of those things. And sports gambling is of course a big ticket item for casinos. They also missed March Madness and all the NCAA hoopla that was going on. That's essentially the Black Friday, if you will, for casinos. If you think about the NCAA tournament and how much gambling action goes on with that. So it's a tough time for casinos in general. And with that in mind, I do need to call out that this is a pretty risky time to jump into casino stocks. We really don't have a complete pulse on the industry, how much money was lost, how will this impact the year, how will this impact debt levels, profitability, all those things. So just a word of warning here in the beginning. Now, with all that being said, there's opportunity. Right? So these stocks have come down. All of the 5 that I'm going to talk about today have come down to some pretty low prices. And if you believe in the company and if you think that they have the cash and the means to survive in the long term, then it's certainly worth looking at some of these companies. And lastly, before we jump into the 5 stocks, on the good news side of things, it's important to note that Macau, which is a popular gambling destination in China, that has officially reopened as of the time of this publishing. So stocks that play, or casino stocks that have a Macau connection are actually getting some revenue from those properties. Of course, you're still missing sports across the board, so there's definitely some concern there. I doubt that these Macau properties are producing the same revenues that they were producing 6 to 8 months ago, but it is at least a lifeline for some of these casino stocks that so desperately need revenue to start coming back in. All right, first stock on the board today is Wynn Resorts. Wynn Resorts is currently trading at $70.65. That's off of their 52-week high of $153. So you got about an $80 savings off the 52-week high. You have a current PE ratio of 61.43. And obviously with PE ratios right now, it is very difficult to separate the truth from the actualities, simply because revenue numbers are going to be completely flipped on their head. But according to Yahoo Finance, as of today, PE ratio of 61.43. Wynn does pay out a dividend, currently at 5.79%. I know that Wynn, like so many other casinos, are furloughing workers, cutting back on executive salaries. The dividend certainly will be up for consideration as another place to cut if they are not able to open back up here soon. Cash and debt. Right now, they have a cash holding of $2.3 billion. debt level of $10.6 billion. So for a casino stock, that's not a horrible ratio. Obviously, the $2.3 billion in cash is the key so that they can maintain their properties. And I put a note up here, yes, Wynn Resorts does have a Macau connection. So Wynn on paper, $2 billion in cash. They do have a Macau connection that should start spinning up at least some revenues. All those things considered, Wynn makes an interesting play if you can handle the risk of casino stocks right now. All right, taking a look at the TipRanks dashboard, and just a quick plug for TipRanks. I've been a paid subscriber for well over a year now. Very happy with the service. I use it all the time. There is a special offer for you to sign up to TipRanks if you're interested, using my affiliate link in the description. But from a Wynn perspective on TipRanks, right now, there's not a lot of the best performing analysts covering Wynn, and you're going to kind of see this across the board for these casino stocks. And some of the reason is these analysts bail on stocks like this during the hard times. So they just take off the recommendation. They kind of play the game of we'll wait and see sort of thing, but they don't like to have their names attached to really volatile properties like casino, cruise stocks, things like that, restaurants during these odd times, because no one wants it to affect their efficiency rating by picking wrong on these stocks. But those analysts who have hung in there, we have 2 buys and 1 sell with a median price target right now of $121.50. That's 71% up from where we are today. So if you can handle the risk, like we'll see across the board, if you can handle the risk on Wynn, there's some fundamental plays to like here and an opportunity for a big upside if revenues can get back online. All right, next stock on the board is Las Vegas Sands. And Las Vegas Sands, in my opinion, is probably the most attractive of the stocks we have featured here today, simply because of their financial positioning and valuation right here, right now. You got a current stock price today of $47.86. That is off of their 52-week range, or 52-week high of $74.29. So unlike Wynn, you haven't had a huge drop with Las Vegas Sands, and that just could be because folks feel more comfortable with their setting and valuation right now. You do have a PE ratio of 13.68, which is obviously more attractive than the 60 we saw on the Wynn side. However, those PE ratios, as discussed earlier, are a little squishy right now, if you will. You got a 6.6% dividend on today's valuation. Cash on hand of $4.2 billion, which is definitely strong. Debt load of $12.8 billion, and Las Vegas Sands is another stock with a Macau connection. So they have property in Macau, and those revenues are trickling in today, which is a good sign. All right, taking a look at the TipRank dashboard for Las Vegas Sands, very similar to Wynn. We have 3 of the best performing analysts who have hung on here. You have 2 buys, 1 sell, median price target of $72.50. That's very close to their former 52-week high, and that's a 51% upside from today's price. So what I'll say on Las Vegas Sands, if you dig through some of their reports, you're going to see a company with a pretty strong foundation that is well apt to survive this storm, if you will. The market has run up here pretty significantly in the past week, and I personally am expecting at least another dip or downturn in the future. So I think to make the most out of Las Vegas Sands, since it hasn't dropped substantially, so to speak, is maybe wait for a red day. If you're interested, look for an opportunity to maybe shave $7 to $10 off of the current $47 price. If you're interested in starting a position, that's kind of the target that I would be looking for. All right, next on the board is MGM Resorts. Stock price today of $14.55. That is off of the 52-week high of $34.64. And with MGM, we got a P ratio, a minuscule P ratio here of 3.75. Again, that's probably a pretty squishy number. You have a dividend of 4.12%. Cash on hand of $2.3 billion, and debt load running the highest of the big three at $15.5 billion, but MGM does have a Macau connection as well, so some opportunity for revenues to come in. And what will likely make MGM sort of popular with the speculation crowd is just the entry price of $14, relatively low risk, so to speak, to jump in and maybe buy 100 shares and see what happens. I'm not going to argue with that. I would say compared to Las Vegas Sands, they're on a much looser foundation, if you will, less cash on hand, more debt. So those are some things to consider, but you're basically betting on the same thing, right? Which is that sports comes back online, eventually that casinos open up here in America, and eventually get to sort of full capacity from an international standpoint. Okay, looking at the tip ranks dashboard for MGM. We actually do not have any buys. We have 3 holds and 1 sell. Median price target of $22.50, which is 54% upside from where we stand today. So you get the kind of vibe of the difference between like Las Vegas Sands and MGM with these analyst picks. While we don't have a ton of analysts to work with in this particular segment, you can see that Las Vegas Sands is offering perhaps some more stability, whereas on the MGM side, the analysts are calling much more for a hold scenario and maybe not start a position yet. But either way, if you're throwing darts at the casino segment, there is that opportunity with MGM to get in with a lower stock price and conceivably, less cost to start a position. So if your money does evaporate and casinos don't recover revenues anytime soon, you wouldn't be out as much money. That being said, though, if you do hit and it wins, people like Las Vegas Sands are going to have a slightly higher upside, and they are obviously going to produce more with their stock price. All right, last 2 stocks, we're going to get into some smaller stocks on the casino side, ones that are focused primarily here in America, and leading off that group is Boyd Gaming. Boyd Gaming today at a stock price of $15.28. Their 52-week high was $36.22. And you got a P ratio right now of 11.07. No dividend for this stock, which is kind of rare in the casino hotel space, but they're still coming up. You got a market cap of just under $2 billion. So this is sort of an up-and-coming play. Cash on hand is definitely a little low right now at $250 million, and the debt load of $4.7 billion. So that's not the best ratio you'll ever find. And you have to wonder a little bit, with all these casinos being closed, how much debt they're likely going to have to raise in order to keep the lights on, so to speak, when America does get back online. So definitely dig through the cash and the debt settings for Boyd and make sure you think they can survive potentially another hit from the coronavirus in case things don't work out the way we see them today. No Macau connection for Boyd Gaming, so they are definitely in lights off mode. I put off to the side here, they do operate in America exclusively, and they have hotels in Las Vegas, Illinois, Indiana, Louisiana, Mississippi, Missouri, and Pennsylvania. Now, one of the big bright spots for a smaller company like Boyd Gaming, and we're about to jump into Penn Gaming, is just that they are in America and they're penetrating the smaller markets. So as I've said before on this channel, one of the real untapped opportunities in the casino play is the fact that sports gambling is slowly spreading across the country, and you have several additional states beyond Las Vegas online now, Pennsylvania, Illinois, Indiana, just to name a couple. So if Boyd can capitalize on a rise in sports gambling in the areas that they have casinos operating, it could be a really big win for them, because otherwise these Midwestern casinos are just slot machines and blackjack tables basically. But if you could enhance your traffic with sports gambling, not to mention inherit your ROI, because a lot of those bets, of course, the house typically wins, then there is definitely potential here with Boyd. On the risk side, you've got the higher debt load and the lower cash. So these are all things you have to think about before you invest. All right, on the TipRanks dashboard for Boyd Gaming, we actually have 3 buys, 1 hold, median price target of $33, which is up over 100% from today's price. One call out I will make on the 3 buys, I dug in a little deeper on TipRanks, and you can see where analysts have posted their buy, holds, and sells. And there's only one of these buys that has come in over the past 7 to 10 days. So the others were up to 2 months old, and what happens there obviously is the world has changed a lot in the past 2 months. So a little word of caution on these buy signals. One of them is fresh, 2 of them are a little bit older. All right, last stock on the board is another smaller American-based casino play, and that is Penn National Gaming. Penn National Gaming, current stock price of $13.91. That is off of a 52-week high of $39, which you see on the 1-year chart actually occurred right before the virus sort of tanked the market, and that was through some acquisition news that they had. Penn acquired another smaller chain, the name escapes me right now, but you can look it up in the news, and added to their property portfolio. PE ratio today stands at 37.59. No dividend for this company, and they are right about the same market cap as Boyd, just a little bit under $2 billion at $1.62 billion. Cash on hand at $437 million and a debt load of $11.3 billion. So very strong parallels financially with Penn and Boyd. So you have millions of dollars in the bank. Is that enough when you look ahead to some of the bigger players like Wynn, etc., that have billions of dollars in cash on hand? Now, you don't have to pay the dividend, and my guess is that they furloughed most of their workers, so it may work out in the end. One of the strong points for Penn National Gaming is really the size of their portfolio. You got 42 casinos and racetracks in almost every corner of the country, specifically targeting Northeast, Southwest, Midwest, and of course Las Vegas. So Penn is definitely in a position where they've put their anchors down, so to speak, across America, and if sports gambling turns into the play that I think it will, then they are in the best position from the standpoint of locations to tackle all of the demand that could come with sports gambling. That demand probably won't arise until closer to football season, since everything else has kind of shut down for the year. But it's definitely an intriguing stock from the portfolio that they've built up. And they don't necessarily just need sports gambling to come online to win. There's obviously the slot machines and stuff in here. The catch is how quickly does America get back to the casinos in general? What happens when the doors open? Are people interested? Are unemployment numbers dragging down the number of people that go to casinos? That's the unknown. That's the big risk. And I keep saying it, but it's something that you have to keep in mind if you're going to jump into casino stocks right now. All right, looking at the TipRanks side for Penn National Gaming, again, limited of the best performing analysts, but you do have 2 buys with a median target price of $29.50. That is up over 100% from today's price. Again, just like Boyd, At least one of these buy ratings is over 2 months old, so it's hard to really calculate what the sentiment is from a live standpoint. However, one of the buy ratings did come in over this past 7 days, so there's definitely analysts, at least one, who still feels good about the future in the next 12 months or so for Penn National Gaming. All right, guys, so those are 5 casino stocks to watch in 2020. It's definitely going to be an interesting story. If you don't have a position in casino stocks, but you're looking to get in, just know that it's going to be very similar to cruise lines, restaurants, hotels, etc. It's going to be a buy low, hope for the best news possible, and maybe in 2 to 3 years you can, triple your money if the revenues come in. I definitely think sports gambling in America will help push the revenues for all of these partners here. The unpredictability, though, that actually makes for the concern, but that's the game, right? That's the stock market game. Like, the higher you go into risk, the bigger the reward. Casino stocks are not currently on my list. However, they're definitely something I'll probably look at closer to the summertime to see, how are things going in the industry, how much is the consumer returning to them. I think the prices will stay down for a little bit longer, maybe 3 to 4 months, because this is an industry that's going to take longer to recover. But if sports gambling starts to spin up a little bit faster in America, then I've got my eye on the smaller ones that we mentioned here. All right, hope you guys enjoyed this video. Please give me a like and subscribe if you like stock market content. I'll see you on the next video.